Hello students, today we will start with topic purchasing process. In that particular purchasing topic, we will see what is purchasing process, why it is important, and purchase process is important for what purpose, and different steps in purchasing process. Now we will see one by one what is the purchasing process. Individuals, businesses and organizations need purchase goods and services to meet their need on a regular basis. So what is the purchasing process? The primary benefit of a formal process for purchasing is avoiding waste due to fraud and other financial loss which is not documented or unwanted buying habits. So it will save the money of a company, or you can say it will avoid unwanted buying habits which are not documented. So purchasing process implementation is very important to avoid waste due to fraud, extra spends, theft and other financial loss which are not documented or unwanted buying habits. So what is purchasing process? Traditionally, the purchasing process is a cycle with each step requiring the exchange of information and various approvals to move forward. Purchasing process is a cycle with each step requiring the exchange of information and various approvals to move forward. Every business will have its own unique touches to add, but generally speaking, the purchasing process follows a well-established pattern of events. Now we will see why purchasing process is important. Purchasing process is important for efficient and effective buying process. Purchasing is become core competency of the firm. Finding and developing suppliers and bringing in expertise that is highly valued by the organization. Again, purchasing is generally responsible for spending more than 50% of all the revenues which the firms receive as an income from sales. So that's why purchasing process is very important. Creating an efficient and effective buying process for direct spendings like raw materials and indirect spendings like office suppliers, IT services. The important aspects not only affects revenue and sales but also the relationship between the organization and the supplier. So it will help in successful supply relationship management, optimum supply chain management and strategic sourcing for both cost saving as well as value. The purchasing process is important for streamlining the procurement cycle and all its sub-processes. The purchasing process helps in auditing process for internal as well as external review, which will help during auditing of company or finance audit, or it will help in establishing a model for business process management that can be applied across your entire organization. This is very important part. Now we will see what is actual purchasing process is. There are various steps in purchasing process, right? We will see one by one. Before that, we will see the actual flowchart for purchasing process. This is a flowchart for purchasing process. There are 9 steps. Each step is very important. Purchasing process start with first step called as need for goods or service identified. These are identified. Second step is purchase requisition created. In the second step, purchase requisition is created by the other department to the purchase department. In the third step, PO review and approval is given by purchase department. Fourth is first step of purchasing process is request for proposal. This is also called as RPO or quotation. Fifth stage is contract negotiation and approval. This is very important stage in purchasing process because negotiation is done here as well as approval is given to the purchase order. So here actual purchasing, you can say, is the main and important process of step of purchasing process. Sixth step is shipping and receiving. Here goods are shipped and received that are noted by the purchase department, and depends upon that payment is done. There is a 3-way matching process in that packing slip, purchase order and invoice are compared together. On the basis of that, next process is done. The next stage is invoice approval and payment. Main important process. Invoice approval is given by purchase department as well as accounts department, and payment is done on that basis to the supplier. And next step is accounting records updates, and as per payment or invoice approval, accounts will update their records after giving payment to the supplier. First stage of purchasing process is need analysis. At this stage, the company recognizes, documents a need for goods or service to solve a particular problem. First, company will recognize the need, and then it documents the need. Purchase department will analyze the needs of all departments. On the basis of the need, preference is given to a particular department. Means which department has more need. Means importance is given to needy department. The purchase team describes the needs to be met and works with other departments to determine how best they can do. Based on need, purchase department will make the analysis. Then now we will see the example. For example, a company facing high travel expenses might invest in more fuel efficient company transportation. If a company is facing high travel expenses, then company will find out fuel efficient company transportation for its sales staff. Reduce the amount of travel required for remote employees. How they will do? By investing in advanced telecommunication software, and there is no need to visit that particular remote place because the business from that particular remote place is less. So they will concentrate on nearby suppliers so that sales executive can go easily with low investment. Second stage, purchase requisition to purchase order. Purchasing requisition is submitted by individual or team or department to the purchase manager of purchase department. So purchase requisition is submitted mostly by individual or a particular team or department to the purchase manager of the purchase department. The purchase requisition contains full details of the items or services to be obtained. There are various types of details are explaining requisition that we will see in our next lectures in detail. What is requisition, importance of requisition, and how that requisition is prepared. So purchase requests are automatically updated with budget of that particular department. Amount is within the limit, then purchase order submitted to the preferred supplier for that item or service. When the purchase requisition is issued by the purchase department, they will compare with their available budget. If budget permits, then they will permit that requisition for the next process. More expensive purchases or unexpected purchases which are not in the budget will be forwarded to appropriate individuals for review and approval before they can be transferred to PO. Expensive purchases and unexpected purchases are avoided. Rejected purchase requisitions are returned to issuing department for review and correction or clarification as needed. Some requisitions are rejected. All requisitions are not accepted by purchase department. There are various reasons. Due to expensive purchases or unexpected purchases, the budget is low for that particular department, or some products are available in stock, then purchase manager has authority to reject that particular requisition. Only selected requisitions are accepted by purchase department. Before accepting requisition, purchase manager has to check available stock, and if same material is available in stock, then preference is given to used material available in stock. So preference should be given if the material is available in stock. They will avoid extra purchase. Now the next step is purchase order review and approval. Approved purchase orders are sent to account department to verify the funds exist in the appropriate budget to cover the request goods and services. These approved purchase orders are sent to the account department for verifying the funds, if funds are available or not. If funds are available, then account department will give green signal to the purchase department, and then purchase department will forward that purchase order to next process. Request for proposal. POs, that is purchase orders that receive budget approval, are returned to the procurement department as required, used to create request for proposal. Means that purchase order which has budget approval are returned to the department. Purchase department will create request for proposal, RPF. It is also known as quotation or RFQs. Mostly in commercial language it is called as quotation. These are dispatched to the vendors to fulfill the order for goods or services. Then potential suppliers submit their bids and carefully reviewed based on the performance history, compliance record, and important features such as average lead time, reputation in the market, and price. On that basis, the comparative statements are made for selected suppliers. So purchase manager will study this comparison statement before calling suppliers for negotiation. So this is very important stage. Now fifth stage is very important. This is contract negotiation and approval. The vendor with the best bid is then awarded a contract. Then before signing the contract, terms and conditions are discussed, and to ensure mutually satisfactory arrangement for both parties. These terms and conditions includes delivery time, quality of goods as per standard, costing of product and pricing, A negotiation is done on the basis of product cost, market price, previous purchase rate. Once the contract is signed, the purchase order is legally binding agreement between buyer and seller. The next step is shipping and receiving. The supplier delivers the goods or services within the agreed upon time frame. Once they have been received in the case of goods, the purchaser carefully reviews the goods and services. Means whatever goods sent by the supplier and which is received by the purchase department, they will check whether the goods are received in a good condition or in a time limit. They will ensure that received and what was promised. Means they will check what was promised and what is received. And if there are any problem or issue, then the purchase department will inform to supplier regarding the issues. All problems should be sorted out before entering goods in the warehouse. All problems should be sorted out before entering in the godown, because if problems are not solved in a particular time frame, there are issues between supplier and company. So it is loss to the company as they are not getting the product on time or defective product. And the same way, supplier feels that he has delivered good quality material and the company is not giving his payment on time. That is the main reason to sort out issue as early as possible to avoid further problem and long-term relationship with suppliers. So this is a main problem you can find in any organization between supplier and company. If this problem is solved, then purchase department efficiency is considered very good. Next step is 7th step, three-way matching. What includes in three-way matching? The three-way matching is the comparison of shipping documents. You can say packing slip. Packing slips comes with material delivered. If supplier delivers the material, he sends a packing slip. In that packing slip, they will mention quantity of the goods delivered, right, and date of goods. So quantity is very important. This packing slip, in this three-way matching, the comparison is done with packing slip, original purchase order which is sent by the purchase department, and the invoice issued by the supplier, right. On the basis of packing slip, supplier will issue the invoice to the company. So these three documents are very important. First is packing slip, which includes all details, you can say quantity. Second is purchase order, which is sent by the purchase department to the supplier. So purchase orders has all details, start from quantity, quality, price of the product, delivery date, everything. And invoice which is sent by the supplier, it should be matched. These three documents should be matched. The quantity in three documents like packing slip, purchase order, and invoice should be same. If there is a difference in between three documents, then there is a problem and the account department will not approve that invoice. So whenever this material is delivered to the company, they have to check the packing slip with purchase order and invoice issued by the supplier. The comparison is used to ensure all the information related to transaction is accurate or not. If any discrepancies occur, that should be rectified as soon as possible to avoid additional charges or delay in production and payment, or you can say damage to the supplier relationship. If there is a difference in between these three documents, then there is a problem in both ends. Means purchase department has problem also and the supplier will face the problem because there is a difference between these three documents. So these three documents are very important for purchase department. So they have to check the packing slip, purchase order and invoice, their quantity, price, and based on that they will send that particular invoice to the account department. Once the purchase department will verify all these packing slips, purchase order and invoice, then they will forward this invoice to the account department for next process. Next step is invoice approval and payment. Successfully matched orders are approved for payment. Successfully matched means what? Packing slip, purchase order and invoice documents are matched, then these are called as successful match orders and are approved for payment. Any modification or additional charges may require another layer of approvals. before payment can be issued. If there is any change in between purchase order and invoice, then additional approval of higher authority is required. Once approval is made from higher authority, then payment is issued to the vendor. If not approval is not made, then payment is not issued to the vendor. Early payment discount and other incentives are given to avoid the late payment fees. It depends upon company policies. Some companies will give early discounts or incentives to avoid late payment fees. In some cases, advance payment is given as the goods are required to urgent basis or purchased from reputed company. For that purpose, they will give advance payment. They will not give advance payments to all companies. Only if there is urgency of material or they are purchasing from a reputed company, then only they give advance payment. But most of the times, payment is given after receiving the delivery of goods. Quality department will inspect goods as per their standard. If this standard is fulfilled, if approved by the quality department, then report is sent to the purchase department, and according to this report from quality inspection department, purchase department will decide to accept the goods or reject the goods received. If goods are received, then inform to the account department for payment. If goods are rejected, then debit note is raised by the account department to the supplier as per orders from purchase department. So quality inspection is very important, right? If quality department will inspect goods as per their standard, and if any problem occurs or any issue related to quality, then quality department will not accept that goods and they will reject that particular material, and they will send report to purchase department with details. Then purchase department has to coordinate with supplier for rejection, and if a supplier accept that rejection, then they has to send goods back to the supplier, and they has to purchase department has to raise debit note to the supplier because they are sending goods back to the supplier. And if goods are accepted, then inform to the account department for payment. So this job is very crucial and very important job. If rejected goods are accepted, then there is a loss to the company. So next stage is accounting records update. This is the last stage of purchasing process, and this is very important because once the payment is done, the purchase department will inform by the account department that payment is done to the supplier. So account department will update their records. They will complete orders are recorded in the company's book, and all documents related to transaction are securely stored in centralized location. Then they will send information to the purchase department that this particular supplier has given a payment. If full payment, then no issue. If there is a part payment, then there is a balance with the account department. So account department has to pay balance payment to the supplier, and purchase department has to follow for that supplier's payment in time. Otherwise, supplier will get less payment. So purchase department job is to do follow up with account department for the payment, and account department will record the updates. Complete orders are recorded in the company's book. All documents related to the transaction are securely stored in the centralized location. So these are 9 steps of purchasing process. If company follows these 9 steps, then there is no rejection of purchase order. And these are the standard steps. It will, or you can say, these steps are changed as per company policy or depends upon their particular product. So company to company these steps will vary. So I have explained you the purchasing process and steps in purchasing process. If you have any doubt, we will discuss now, or you can ask questions, right? Thank you.